So in continuation with the part 1, where we saw the concepts about claiming the refund on the withholding tax, let's continue to take the same example here and then go ahead and see how to file it in ITR2. So in this example, the total gross dividend which the employee got is 142.87 euro. And then there were around commissions and then charges, which is resulting to 37.67 euro. And finally, deducting that will give to 105.2 euro. Converting everything into INR, here I have taken an exchange rate of 85 euro. And considering the tax implication, we have a tax implication of that 3,201 euro on the German side of it, because the company has been deducting and withholding the tax at the rate of 26.3%. And then on the Indian side, the tax implication for dividend tax is 10%. So considering 10% on 12,143, it is resulting into 1,214. And there is a tax relief which we need to get from this transaction is 1,990 rupees. So let's see how to file this in ITR. So when we go to the assessment here, we have to select the current assessment here where we are, and then go to the online recommendation filing. Have been filing the other components of the taxes. So let's quickly jump on to claiming the withholding tax directly. So as mentioned in the earlier video, we need to have certain sections ready. For that, you need to select schedule of income from other sources, schedule of income from foreign assets, and schedule of income, source of income from foreign assets, and then also schedule PR. I will show it to you as we get along this video. So in the income from other sources section, I'm going to declare the 12,144 rupees component, which we saw in that example. So this is the place where I have declared it. Let me show you. So when you click on edit, you would see that I have added that under the dividend income other than 0.2 and then saved here. However, please be aware that this income is not similar to the other income sources. For example, let's say if you have a dividend in India, or if there was another outsource other than income, for example, let's say from a fixed deposit. This is particularly different from those other sources of income. So in order to differentiate it, we need to declare that under income chargeable at special rates as well. So let me show you that piece. So this is the income which is collected and then to be charged at a special rate. So I have selected here nature of income as F, because this is something we have declared under 0.1 for gross income as dividend. And this is the total income, 12,144. And this is declared under bullet point number 1.A.1. So that's why it is selected. Country is Germany in the example. And as per DTAA agreement, the article for dividends is 10. And the rate of exemption as per the treaty is 10%. And on the Indian side, the section of income tax is 5621 for dividends, and the rate chargeable for dividend is 10%. That's why I put 10 and 10 here and saved. So this piece completes the declaration of dividend income under the schedule other sources. However, an additional point to remember is this income will be given to you under a specific quarter of the year. Let's say it's in the quarter starting March or quarter starting September and so on and so forth. So there is an additional subsection under income from other sources where we need to also mention this income. So I have listed this under point number 7, dividend income taxable at DTAA rate, which is 12,144. You can confirm on that. So once the income from other sources is declared, the subsequent activity is to look at the foreign asset section. As we are holding this asset in a foreign country, it needs to be declared under Schedule of Foreign Assets. And the detail to be selected is section D of the foreign assets, because this is a capital asset. Let me show you subsequently what needs to be filled once you select the nature of asset as a capital asset. So here here we have to select D, which is a capital asset. Then the country is Germany. Zip code, pick up it from the company's headquarters zip code. That makes sense. And nature of asset is shares. And then in terms of ownership, we have three different options: owner, beneficiary, and beneficial owner. As we know that many times when employees contribute to the stock options and shares, the employer also contributes certain amount of contribution to buy such shares. So in this case of example, I'm considering a scenario where employee contributes certain percentage for the shares and rest of the money is added by the employer as well. In such a case, it is a beneficial owner. However, let's say if the employee does not contribute anything for purchasing of shares, then the ownership will be beneficiary instead of beneficial owner. So select accordingly depending upon your use case. For the example I'm mentioning, I have selected beneficial owner. The date of acquisition, you can derive the date of acquisition information and total investment cost from the transaction statement. This transaction statement you can download from the DMAT account of your employer. The investment cost I have considered here is only on the employee side contribution, because this is the contribution from the employee. The income derived from this asset in our example is 12,144, and the nature of income is dividend income. And then this is taxable on the Indian side at the rate of 10%. So I have considered 1,214, and it is offered under other sources, as I just mentioned. And the item number of schedule is 2F. And then I click on save. So this confirms the declaration of Schedule FA. The subsequent step is to take this information and proceed to file TR. But one step before that, even before we go into schedule of tax relief under section 90, 90A or 91, we need to fill in the source of foreign income. Here the source of foreign income is the share dividend. So click, I want to show you how I have filled it section. I kept it ready. Here select the country code, Germany in this example, and the tax identification number would be your PAN card number. Head of income would be other sources. And in case of the income from outside India offered for tax in India, you can enter here the total gross dividend. Tax paid outside India is 26.3% of the gross dividend. In this case, I'm considering 26.3 because that's the tax rate in Germany. And tax payable on such income under normal provisions. Here a little bit tricky part. So we need to compute the 10% of 12,144 and then subtract from 3,202, and then this is the remaining amount. So this amount is exactly the relief in our example. So if you look at the example, the amount you need to enter in this field is a tax relief which is claimed in India. And the relevant article under this section is 90 or 90A. So we need to mention here 90 because that's the article we are referring to. Click on save. So you see here the tax relief available in India is 1990. Consequently, you need to look at the tax relief section PR. This will be auto-populated once we fill the foreign source income section. So this is right. And then the tax relief is claimed under section 90. And there is a question number 4 here, which you need to see whether any tax paid outside India on which the tax relief was allowed in India has been refunded, credited by the foreign tax authority during the year. In case if you have received any tax refund already during the year, you need to mention that. In my example, as I mentioned, there is no tax refund during the course of the year. That's why I selected no. And you can click on confirm. So to summarize, we have filled the summary section of income from other sources. We have declared the foreign asset, and then we have also showed how to file foreign schedule income. Then also have checked this schedule TR. So with that information, we have completed declaring on the side of the world. We need to see if it gets picked up in the tax computation. So click on tax paid to verify once so that the tax engine can really calculate the taxation. Of course, in my case, there is nothing else to confirm on this section. I can straight away jump to the tax on total income. On the tax on total income, you see here, the tax relief, whatever we have requested for is reflecting. That means that what we have done has been taken up in the system. So now you can proceed and validate the other sections as well and file the taxes for this year using ITR2. However, don't forget there is another subsequent section which is filing form 67. I have created another video for that. Do listen to that and also file form 67. That would finish claiming the refund on withholding taxes. Thank you for watching and do subscribe to the videos and the channel. Thank you.